Welcome back to Success with Steven. My name is Steven Smith. On this channel, we discuss all things financial literacy. Last year, I made an updated video on building business credit with no money, and I posed the question that I posed the year prior to: how long would it take for most of us to save $100,000 to reinvest into our business? According to Google, some estimates would suggest that it could take anywhere from 5 to 14 years for the average person. If you've been a subscriber of mine, then you know my journey. You're probably aware that I've been able to make over $400,000 now in a single year, and that was thanks to two things. Number one, starting a cash flowing business, and number two, leveraging business credit. So today I'm going to provide you an update on building business credit to access at least $100,000 in business funding. This does not require documentation or proof of income. All you have to do is follow some strategic steps and meet specific requirements. So without further ado, let's get right into the video. Let's start with a simple question. What is business credit? Now, simply put, business credit is capital that you acquire from a lender or a bank for your business entity. Now, and this credit is designed to help your business grow. Thus, it helps stimulate the entire economy. Now, if you have a solid business credit profile, this can help you secure high limit business credit cards, business lines of credit, as well as business loans with more desirable terms, and you can qualify easily for more than $100,000 of business credit within a few months. Now, there have been a lot of videos on YouTube about how to build business credit, and I think that this is going to be the most efficient and fastest way that you can do this and to get funded within 45 to 90 days. Now, this will depend on where you currently stand with your personal credit. I've established business credit for probably the last 4 to 5 years with various different businesses. I was introduced to business credit by one of my coworkers a few back, and I think that this guy may have been the first millionaire, or at least the first person that I've met that just showed me his account, like, this is how much I have. Now, at the time, I was thinking that was a lot of money, but from what I know now, it's not really a lot. Now, granted, yes, $1 million is a nice lump sum of money, and I think that we'd all choose to have $1 million versus not having it, but on its own, it doesn't actually make you rich and it doesn't make you wealthy. When he introduced me to business credit, I started seeing how you could leverage money that banks were giving out, and that can also create income for you to escape your 9-to-5 job. And then you can actually do a lot more with leveraging debt as opposed to just selling your time for money. It's actually a liability to hold on to money. And at this point, I've talked about this in so many videos in so many different ways. You need to purchase assets and you need to keep your money in rotation in order for you to make more money. It is detrimental to your financial success to hold on to or to hoard money, and your money will depreciate much faster than you can earn it if you're working a regular 9-to-5 job. That is the reason why it's very important for you to secure cash flowing assets in order to create income, and business credit is just one tool that you can use in order to do this. So if you were to ask me what I think my definition of business credit is, it's just another way for you to extend your reach that your 9-to-5 job just can't quite touch. Technically, there's no limit to how much you can get funded, so there's no limit to how much money you can actually make or you can scale up to. Now, that is a brief intro of how I learned about business credit and I guess my own idea of what this actually means to me. Now, this probably goes without saying, but I still need to go over it because someone new might be seeing this for the very first time. Now, personal credit is separate from your business credit, and it's based on your company's financial history. Now, when lenders evaluate your business credit, they look at how well your business will manage its finances and how bills are paid and how much debt you actually carry. There are 3 main business credit bureaus. You have Dun & Bradstreet, known for its DUNS number, which is a unique identifier for your business. D&B is one of the most widely used bureaus for tracking business credit scores and financial history. If you want to learn more about your DUNS number, I have an entire video that goes over that. I'm going to link that right here, or you can check out my business credit playlist down in the description below. Then we have Experian Business. Experian is a global credit reporting agency that also provides business credit reports and scores. It helps companies assess the creditworthiness of potential partners and customers. I also have a video where I break down your Experian business credit report. I'll link that video here as well if you want more details about that. Then we have Equifax Business. Equifax offers business credit reports and scores that help companies evaluate their financial stability and potential risk when working with other businesses. You also have Safe Credit and the SBFE. Now, each of these bureaus provide different types of credit scores and reports. However, you'll often see scores ranging from 0 to 100, and they're determined by credit reporting agencies like Dun & Bradstreet, Experian, and Equifax Business, just like your personal credit score. The higher your business credit score, the more likely you are to get approved for loans, lines of credit, or even favorable supplier terms. When you're looking at building business credit, one of the main things that we want to focus on is creating a structured business. A structured business in the context of business credit refers to a company that is legally organized in a way that establishes it as a separate entity from its owner, which is essentially building business credit. This structure is key because it creates a distinction between personal and business finances, enabling a business to develop its own credit profile. When a business is successfully structured, you'll be able to generate a business credit score for Experian Business, Equifax Business, Dun & Bradstreet, as well as Credit Safe and the SBFE. Experian's IntelliScore Plus and DNB's Paydex score will use a scoring algorithm that ranks scores from 1 to 100. Ranking systems like these typically associate a higher credit score with good business credit. For example, a DNB Paydex score of 80 or higher would mean that you make on-time payments or early payments. Other companies like Equifax's Small Business Credit Risk Score for financial services will use a rating system that ranks scores from 101 to 992. You also have your FICO SBSS scores that range from 0 to 300, and like the other business credit indexes, the higher the score, the better. If you're seeking financing, the FICO SBSS number to remember is 155. If you have a FICO SBSS score of 155 or above, you can usually pre-qualify for an SBA 7A loan or other various SBA loans. Now, most banks have a higher standard and will only pre-qualify you with a score of 160 or above, so always keep that in mind. Now, I have 2 more videos that actually talk about this, but YouTube has a limit of how many videos that I can actually link. I have another video about building business credit with net 30s, which is really the next video that should come after you watch this one, but I've remade it every single year, so I'm going to link that video here. The one I link here should be the latest one though for this year. I also have a video on how to qualify for SBA loans. I highly recommend that you watch that. And once again, if I run out of videos that can actually be linked, then just go to my business credit playlist or go to my channel, click on the magnifying glass and type in the name of the video. It should come up right there and you can watch that video. Now, I've broken down building your business credit into 4 simple steps that you need to follow. Number 1 is to create your business. You need to have a business if you want to build business credit and ultimately receive business funding. Step 2 is to structure your business. Now, this is going to be the most important part of this video, and this is actually the main purpose of this video today. This video is more about telling you about structuring your business than anything else. Now, if you have not created a business, I have a video called How to Set Up Your LLC for Free in 2026. I highly recommend that you watch that video. Again, I'll put it here or you'll see it on screen. If you don't see a link for it, then you can go to the business credit playlist, or you can also just search my channel. It's going to be there. Now, that will show you step by step how to start a business, okay? Step number 3 is relationship banking. Now, this I've talked about in various videos where normally I speak about a bank or a credit union or a business line of credit or a particular product. In those videos, I go into detail about how to build a relationship with that specific institution. However, that will always be step number 3, building that relationship. Step number 4 is approval, which is going to be the final result in this process. And I would say it's probably the least important step, because if steps 1 through 3 were completed properly, then step 4 should be inevitable. Creating a business involves several key steps, from planning and legal structure to marketing and growth strategies. Now, I'm already assuming that you've done the research and you have a plan for this business. Once again, I have so many videos on this channel, but I just want to give you a brief overview of the types of business structures that you can choose from. Each one will impact your legal responsibilities, your taxes and liabilities. Now, one option is a sole proprietor. If you're trying to build business credit, more than likely you're not going to be looking at a sole proprietorship. You can have an EIN number with a sole proprietor, but this doesn't really work for building business credit. I would say if you're someone who makes money on the side, and let's just say like you're not ready to take that step of creating a separate entity, then this would be the option that I would look at doing today. You also have the option of a partnership that involves 2 or more people sharing ownership and responsibilities. Then there is a limited liability company. This is usually the most common business structure. It provides liability protection for owners while offering flexible tax options. Then you have a corporation. A corporation can be a C Corp or a S Corp. Those are actually not types of business structures. They are tax elections, okay? So a corporation is just simply a corporation. S Corp or C Corp will be determined when you file your taxes. Now, I like corporations because this is as far away that you could get from personal liability as possible. This is a separate legal entity from the owner. It's a little bit more complex when it comes to taxes and regulatory requirements. Now, once again, I'm already assuming that you've done the research on this, like you picked your business name. You want to choose something that's unique, something that's memorable, and something that is actually available in your state. There are ways for you to actually check to see if that is available for you. Now, you also want to register with the government, which means that you went on to your state Secretary of State website and then you actually incorporated your business. This would also involve thinking about your business idea. What products or services would you like to offer? Consider your skills, your passions, and market demands. I know most people are watching this because they just want to get business funding and they think I'm just going to start a business, get business credit, and I'm going to use money to buy property. Look, if you've never done anything when it comes to real estate, that's most likely not going to work. What I would say is start a business and really think about something that you want to do. Really think about it because, again, remember I said the first thing I did was start a cash flowing business and then leverage business credit. All right. You're not getting money and then making money from something that you've never done before. Most people will always fail. So again, that's just my warning, but you can do whatever you would like. I highly recommend you thoroughly think about this business idea. You want to do market research and look at the industry you're in, your competition, your target audience. This will help you understand your potential customers and position yourself to actually make money. I would also consider writing a business plan. Now, you can do this in like a spreadsheet or something like that, but a business plan will outline your goals, your strategies, your target market, your financial projections, and any other steps that you need to take in order to grow your business. And I would say a solid business plan is always good for, let's say, securing investors or just getting business funding in general, because most of the time you'll be asked on applications, what does your business do and how do you plan to actually use these funds? So the easiest way to explain business structure is to think of it like you're creating a new identity, right? The first step in business structure is obtaining your EIN through irs.gov. Now, every US citizen has a social or even a tax identification number. That's going to be what you need for your business. Your business's social is your EIN number. Now, I have an entire video on EIN secrets that lets you know some of the benefits of having an EIN number. I'll link that video here. If not, once again, business playlist, or type it into the magnifying glass and you can find it. The second step is that your business needs to have an address. I recommend that you obtain a virtual address if you do not have a physical one for your business. I don't recommend using your personal address for your business for several reasons. I have an entire video on the best virtual addresses for this year. You can check out that video to find out those reasons. The third step is that your business needs a phone number. Now, we all have phone numbers. You need to get a separate one for your business. If you don't have a phone number, you can get one from Google Voice. I also have various videos on this channel where I'll show you how to get T-Mobile, AT&T, Verizon. You can get a business account with them and you do not have to use your social. You can do it EIN only, but you need to have a structured business first in order to do that. And once again, all those videos are in the business playlist. Now, step number 5 is obtaining your DUNS number. This is what you need to generate a paydex score. I have a video that shows you how to do that as well, step by step. You also want to register your business with the 411 directory. It just looks very legitimate when they can find your business online, and this also helps you find it in phone number directories. And finally, your business needs to have its own bank account. So when you're looking at this, don't think of it as like a bunch of steps. Again, think of your business as its own person, which this is kind of the things that that you would likely have if you were an individual. You're going to have your own social, which is your EIN. You're going to have like a place to live, right? Like your address. You're also going to have a professional phone number or a phone number to be contacted. You also want to have a professional email address as well. Usually that involves you also having a website, which kind of comes as a package when you get your domain name. Now, I want to cover that really briefly. When you take a look at a website for your business, this is an example of my business, successwithstevensmith.com. It is a website one-pager, but for you, you should have one with your business phone number visible, a business email, a business address associated. Now, this is a only virtual company, right? Like everything I do is online, so I don't really have that. But if you have services and other things, you want to make sure that you want to have a business email so customers can contact you, obviously, right? You need to have a business address to show that you actually have a place of business. And then you want to make sure that you have a phone number so people can contact you. Now, in relationship banking, the business will work closely with the bank over time, giving the bank a clear picture of that business's financial health, management, and operations. Now, as the bank gets to know your business better, it becomes easier to establish trust. And this trust can be crucial when it comes time to apply for loans, lines of credit, or business credit cards. If you have a strong relationship, this can improve the likelihood of approval. And building a banking relationship is very simple. I'm sure most of you already know what it is, but you start by opening a business checking and savings account, and you can do this with a bank or a credit union. Now, this is a fundamental step in separating your personal and business finances, which is crucial for establishing business credit. You want to ensure that you maintain a healthy balance and manage your account responsibly. Now, I think the easiest way to get started with this is opening up a business account at a place that you already have a personal account with. For me, I personally use Navy Federal, but at this point, I have a business bank account with basically every major institution that you can think of. So again, for you, pick the one that you are currently with now. That's just the easiest way to get started, and you can branch out as you get more funding. All right, so now we have briefly discussed starting your business, structuring your business, and of course, relationship banking. Now, the next thing that we have to discuss is a personal guarantee versus net 30s. A personal guarantee is a legal commitment made by an individual, usually the business owner or a high-level executive, to be personally responsible for repaying a business debt if the business itself cannot do so. So this means that if the business cannot meet its financial obligations, the individual who provided the personal guarantee will agree to cover the debt with their personal assets, like their savings, real estate, or other property. Now, here's the thing. You are going to be personally liable if the account, loan, or line of credit is defaulted on, and there's nothing wrong with you using a personal guarantee unless your intention is to default, right? This is a normal thing that everyone has to do, which is exactly why I stress so much that you need to know exactly what you're going to do with this capital, because lenders will not give you business credit for the most part without a personal guarantee. Now, there are some exceptions, like if you're a business that makes over, let's say, $1 million in annual gross revenue with at least 2 years of tax returns. In that situation, you might be able to get away without using a personal guarantee. There are also some no personal guarantee credit cards that will fund your business if you have proof of income and business cash flow, and that's usually going to be around $20,000 or more in your account, as well as proving that you have cash flow with bank statements. I've talked about several no PG credit cards in various videos, so if you want exact details about how to get approved, then again, you can watch those videos. Now, there are a lot of people who are rebuilding their credit, and that's the reason why they're interested in business credit. And I've released so much content when it comes to repairing your personal credit. There's also something you could use called rising.com. Now, Rising will help you understand exactly where your personal credit stands by giving you access to credit reports and scores, while also helping you identify negative items that might be holding you back. On top of that, Rising can also help you build credit. You can report your rent and utility payments, and you can back report for up to 24 months. Now, if you want to check out Rising today, there's a link in the description. You can start a trial for $1. Now, while I do have various videos on credit repair and there's so many resources that I recommend, this is not a credit repair channel, and I do not offer any credit repair services. However, what I can say is that I've personally repaired my own credit. I have so many comments of people showing that they have done it themselves too by following all of my methods and recommendations. So don't let your personal credit deter you from trying to build business credit. When I started building business credit, I had a 480 credit score, but I repaired my credit and built business credit at the exact same time. So if you can't qualify for business credit products due to your personal credit, then you can definitely explore other options in the meantime. Now, the next follow-up to this video is to actually show you how to build a business credit score, and you can do this by using net 30s. Now, a net 30 is a common type of payment term used by business transactions, particularly when dealing with business credit or trade credit. Now, it refers to an agreement where the buyer or the business is expected to pay a full invoice amount within 30 days of the invoice date. And again, I have another video that breaks down step by step how to actually establish a business credit score by using net 30s, and you can do this within as little as 30 days. So if you're in the process of rebuilding your personal credit, I highly recommend that you start with net 30s, and from there you can move to what's called tiered account. These are usually revolving accounts like gas cards for your business. There are some store cards that I have used in the past. Some of these cards are old now, but again, I have updated videos talking about the best revolving accounts that you can look at. Some of these accounts require you to have a business open for 2 years before they're willing to actually give you some of these products and services. But again, I have some videos with some workarounds for that. And again, there are business credit cards that don't require a personal guarantee, and these cards are typically available to businesses that have strong credit histories or substantial revenue. However, they may be harder for you to qualify for, and you'll likely need to meet specific criteria in order to be approved. And before we wrap up, let's answer one final question. Do I need to establish business credit? While having good personal credit can help you secure business loans, lines of credit, it's still highly beneficial and often necessary to establish business credit for several reasons. Number one is going to be separation of personal and business finances. Now, when you establish business credit, this does help you separate your personal finances from your business finances, which is so important when you're trying to protect your personal assets. If you use your personal credit for business purposes and your business faces some sort of financial issue, it can affect your personal credit and your finances. But by building business credit, you can create a distinction between your financial identity from your business and yourself, which would limit your personal liability. Number two is access to larger credit lines and loans. Now, personal credit scores may limit the amount of credit you can access for your business. Establishing business credit can unlock larger lines of credit, loans, and better financing options that are tailored to your business's specific needs. As your business credit history grows, it may allow you to qualify for larger limits with more favorable terms that you wouldn't have otherwise qualified for with just personal credit. Number three is business credit worthiness. Now, business credit scores like Dun & Bradstreet, Experian Business, and Equifax Business, they are completely separate from your personal credit scores, and these scores are used by lenders and suppliers and other businesses to evaluate your company's financial health and reliability. Over time, as business credit grows, it can improve your ability to access credit in favorable terms. Number four, you want to protect your personal credit. Now, if you rely on personal credit for business expenses, it can lead to higher credit utilization, and it can also increase your personal debt load, which can negatively impact your personal credit score. Establishing business credit allows you to keep your personal credit intact and help you maintain a healthy personal credit score while you grow your business. Number five is better negotiation leverage with vendors and suppliers. Now, many vendors and suppliers often will give you things like net 30 or net 60 terms to businesses based on their business credit history. Now, as your business credit score improves, you may be able to negotiate better payment terms or larger credit limits with suppliers. This will help you improve cash flow and manage your expenses. Number six will be less reliance on personal guarantees. Now, if your business has a strong credit profile, you may be able to access business credit without needing a personal guarantee. That is something that will be more important in the future. Without business credit, you're likely to be required to personally guarantee any business debt, which could put your personal assets at risk. And even if you want things like, let's say, an SBA loan, you do need to have an SBSS score, which is scored by looking at your personal credit and your business credit scores. Number seven is building business reputation. Now, establishing business credit also builds your reputation as a business. You'll build it with lenders, investors, and partners. A strong business credit profile demonstrates that you're trustworthy, you're financially responsible, and you're capable of handling larger financial commitments. And number 8 is growth opportunities. Now, as your business credit improves, you'll have more financial flexibility, enabling you to invest in growth. And whether you're expanding your product line or increasing your marketing efforts, or maybe you're hiring employees, having access to business credit can help you take advantage of opportunities that might not be possible with personal credit. I want to thank you guys so much for watching this video. I know I gave you a lot of videos to actually refer back to, but the thing is, this entire process, it is kind of nuanced, right? Like, just having a structured business alone isn't enough. You need to have a structured business in order to actually get approved through underwriting. I've done underwriting in the past. When we pull up your business, like just Google it, we look for certain things. We look for the website. We look for your business number. We look for a professional email, things like that, like very simple things. But that's just like the first thing that we look at. The next thing that we look at is your personal credit, especially if it requires a personal guarantee. Are you responsible? What's your debt to income ratio? Can you afford to pay back this business credit card, this business loan? How much should we give you? All of that will be based on the structure as well as your personal guarantee. Then sometimes they even pull your business credit score. If you don't have a business credit score, which means you never had a net 30, a vendor account, or anything like that, you may get denied even if you have good personal credit. Or if you're looking at getting an SBA loan in the future, then you need to have both decent credit, good to fair credit, I would say, and you also need to have a business credit score established. All of this stuff is required for you to get all of these various products, and this can happen at different times. So a lot of the things that we talk about, you may not need now, but you'll find out later down the line, oh, you need it then. So it's better just to have it all prepped and prepared beforehand. Now, if you have any questions about this process, please drop a comment below. More than likely, I can send you a video that will also answer your question if it wasn't addressed in this video. If there's anything else that I did not touch on, again, drop that in the comments. I'd be more than happy to answer any additional questions. And as always, thank you guys so much for watching this video. I truly appreciate it, and you all have a wonderful day.